All right, folks, we're doing another video weekend update. Going to be fairly concentrated on this one. We are doing Bitcoin. We are doing a few different aspects of Bitcoin and then a little low time frame speculation. We're going to be looking at Mara and we're going to be looking at Riot and we're going to be looking at Mara and Riot denominated in Bitcoin. And folks, let me just start off by saying that this is about as bullish as I've been since, let me go back to August, September of 2023. In that, I believe the steepest part of this rally is in front of us and will happen in the shortest duration of time. I'm not a financial advisor. I don't have a crystal ball, so I don't know what's going to happen in the future. I could always be wrong. Don't take this as any kind of financial advice. Just use this as education and in a different perspective. But with that, let's get into it. And let me just note something here that I continue to just observe in a lot of the predictions, forward-based predictions. And let's just look at the best case scenario predictions. If we kind of come back to this region here or this region here, I was hearing a lot of predictions, and I was one of them. I was one of them, folks. I'm not, just because I have all these followers doesn't mean that I get every move right, because I just don't. I've gotten more right than I've gotten wrong in my career of doing this. However, here's one that I got wrong. And a lot of people got wrong. When we were in this corrective structure here, I was thinking 100K plus, okay? 100K plus is coming. And a lot of this action got me to learn and dive deep a bit more into Elliott wave analysis, such that I learned from my mistakes. Because again, that's what this is all about, is learning, evolving. I'm learning today, I learned yesterday, whether that's in technical analysis or in my real life and what I do. I'm a big fan of, if you're not constantly learning, then you're standing still, or if you think you know it all, then you probably don't. Either way, I'm digressing a little bit, but my point is our price targets back in these regions that you were hearing were 100, 200, 300, 400K. Now here we are in this region, and what are we hearing? The bullish targets I'm hearing 80, 100K, 125K. The highest end targets I'm hearing are 200K, but I'm not even hearing a lot of those. It's not cool to put yourself out there when the market looks like this, and that's fascinating, and that's exactly what we want to see. That's exactly what we want to see. And I'm not going to go through this count. I went through it last week. Nothing has changed. Nothing has changed. Well, one thing has changed. We got another red week. And so if I were to tell you back in, let's just go to the same price in the week of March, the beginning of March. So last month, the beginning of last month, if I were to tell you forward looking, folks, and we were at the same price, forward looking, 1, 2, 3, 4, 5, 6, 7 weeks out of the next 7 weeks, 6 of them are going to be red. 6 of them are going to be red. What is the price of Bitcoin going to be? And we did a poll. How many would guess the exact same price as what it was? No, if I were to put that out there, I guarantee the majority would say, would pick 50s, 40s, and the minority would say we're, consolidating at the same price. And I would not have picked consolidating at that same price either. But that's nor here nor there. The point that I'm illustrating is this is another time-based capitulation. It is not a price-based capitulation. And we have still yet to break down from a key level into a range that's below us. Much like we saw here And I kept saying, when we got closer to this line, I get more bullish. I get more bullish, and that's just a rule that I live by. And I keep contending, and I've been posting this reaccumulation pattern multiple times, and it hasn't played out yet, but I still contend we're still in a reaccumulation phase. Okay, why? What guides me? And I think someone asked me a good question: what determines, whether we believe we're in, because no one knows until after the fact, we're in a reaccumulation or a redistribution? Because that's a great question, because I do see a lot of redistribution or distribution charts popping up. Well, I'll tell you what does it for me. It's the high time frame. It's a weekly chart, and it's the fundamentals based around stage analysis. Okay, and this is just an image of Stan Weinstein's book, one of my favorite trading, or I wouldn't even say trading books, but just fundamentals books that looks at overall trend and what's the easiest way to identify a trend, and what we want to participate in as investors are these stage 2 uptrends. You've got four stages in a market. You've got stage 1, which is a basing stage. You've got stage 2, and this 30-week moving average is the key in terms of delineating where you are within the stage. Stage 2 uptrend, when the asset gets above the 30-week, you usually get some type of test after a basing. And you can think of a basing as an accumulation, a Wyckoff accumulation. They're pretty much the same thing. And then stage 2 is, in Wyckoff terms, expansion, because you hear me talk about expansion a lot. And the initial stages of a stage 2, you get some fight around this 30-week, right? You get some fight around the 30-week because participants don't know if it in fact is the start of a stage 2. You get fake outs above it before, then you get a decisive move. That's a one impulse, right? A one impulse on Elliott wave. You kind of see how I'm kind of putting all these things together. Very typically, it's a one impulse. And then you start getting some separation. And any of these checkbacks along the way, when we have separation in a stage 2 uptrend, is in essence a reaccumulation. And in essence, it's not, nothing is guaranteed. Okay. In essence means your bias has to be that the further you get from the 30-week, any checkbacks toward it, without that 30-week starting to flatten out, and without the asset getting closer to the 30-week, much like we see up here as a stage 3 is developing, has to be viewed as a reaccumulation. Now, if we start getting checkbacks and checkbacks and checkbacks and checkbacks closer and closer to that 30-week, and it starts to flatten out, and these can be deceiving, then I'll start to think about things as maybe possibly starting to look more distributive. Now that we've gotten that out of the way, let me move this, and let's do the same exercise. So I'm going to throw up the 30-week. Okay. I've got my 30-week moving average up in blue, and let's just have fun with this exercise. Let's go back. Let's go back to 2020. So we've got our 30-week moving average, right? And this is an accumulation, right? Fake out above, fake out below, fake out above, fake out below. This is the image I literally just shared with you. Fake out above, and then decisive move above, check back, doesn't even test the 30-week, and now you're in a stage 2 uptrend, okay? And a check back here, reaccumulation. Check back here, reaccumulation. And then we get a check back and we get a breach, okay? And this is one of the things that prompted me to read this book, mind you, is how to figure out and identify, like, what were the early warning signs here? After the early warning signs here, folks, and what we need to learn, and this is as much about what I think is going to happen moving forward, but to help you figure out how you handle what's going to happen potentially after that should the scenario unfold. What do we look for? Well, here's what I look for. Here's what I'm going to start looking for. That's a violation. That's your first violation since it was breached back in May of 2020. That violation occurred May 2021. Okay? That's a tell, and was a tell, that we were in a distribution pattern, up thrust in distribution, and then you get a automatic reaction, you get a test, and then we got a downtrend, okay? And so let's fast forward to kind of where we are today, and then I'm going to share the low time frame chart of exactly what I think this kind of looks like today. And today, where are we, folks? Today, it's just beautiful, right? Downtrend, flattening out, accumulation, okay? We get a breach, that's our wave one. And then we get a consolidation over this accumulation base. We got to break down below it. Look at that beautiful test right there. But then we got to break down below it, which caused the market to consolidate for 1, 2, 3, 4, 5, 6, 7. And this, I think, was probably a reason why a lot of people thought we were going lower, is because looking at this, at least from a technical perspective, looking at this 30-week, this is cause for worry, right? But why wasn't I worried? Because the dominant structure here was this structure. That's the accumulation base. We had a spring with FTX, and we were literally, this is an SOS, sign of strength. And what does that just mean? You're consolidating above an accumulation range. That trumps everything else. That's the structure. And so where are we now? We literally just broke back above it in October. The stage 2 uptrend really got kicked off in October, and that marked the end of our wave 2, our corrective wave 2, right? Impulsive move 3, check back, couldn't even get close, right? That's what you want to see. You want to see bigger separation the further you go. Negative separation, big separation, bigger separation. That's a sign that the trend is getting stronger. The trend is getting stronger. And so here we are, consolidating above previous all-time highs. And this structure, I have to view just like I viewed this structure, folks, when you saw me posting reaccumulations there, just like this structure when you saw me posting SOSs above a reaccumulation phase there. And that's the lens at which I'm looking at this through. And if that's the case, and we've had 6 out of 7 weeks that have been red in a time-based capitulation, you better believe my bias is towards major expansion is next. Major expansion. And I expect it to happen in less time and greater percent value increase than anything we've seen so far. Why? Because what have we seen so far? Okay, that's the price movement. That's the price movement. That's a parabola. That's a parabola, right? Flat, increasing angle, angle gets steeper, and as you move closer and closer and closer towards the end of the resolution of the structure, the price action gets steeper. That's what I'm expecting. Buckle up, folks. The next couple months are going to be, in my opinion, the most aggressive. Okay. Next, let's go to this actual structure as I've been calling it a reaccumulation, and just kind of take a look at a different perspective. So I threw this chart together for this video, very similar to the reaccumulation that I've been posting on my X feed, but a couple differences. I wanted to note that if we look at this structure, we got a move, and a reaccumulation is a move where you get a massive buying force into preliminary supply, and then you get a buying climax. What do we get here? Preliminary, or PSY, buying climax. You get an automatic reaction. You get an automatic reaction. You get a secondary test. Secondary test. Our secondary test happened to take it further than the buying climax, and that can happen. And then you get a move back down into support, and then you get a move back up towards range high. In this case, we got an up thrust in phase B right here, and then we start getting this consolidation down. It's over, it's over, it's over, kind of forming this creek region, and then bottom falls out. Spring reclaim quickly. Oh, it's on, and then test. That's where I believe we are right now. Is I believe we're at the test phase, which essentially is the phase prior to the beginning of this move out. And from a wave perspective, what do you see in a spring and a test? You got a 1, 2, right? 1, 2, 3, 4, 5 wave move. 1, 2, okay, 3, 4, 5 wave move would take us out of here. So I felt like sharing that because I thought it was relevant. Let's just take a look at volume really quick. Volume is the tell right now because there isn't any. There isn't any. Still have declining volume. So we want to see volume come in here as well to kind of confirm that. And of course, there's the possibility that I'm wrong and this spring wasn't the spring, and we've got one more move down, but it's just not in my bias. My bias right now is that this structure looks like a spring and we are experiencing a test, and you know, I'd love to be bearish here, but it's the opposite. This is where I'm max bullish. I'm always going to be in a reaccumulation phase. The closer we get to these areas, the more bullish you're going to hear me, you're going to see me post, okay? That's just the way it is. I was a bit quiet during our move from 40 to 60, 70. And people were kind of saying, why aren't you posting more? Because the price action is doing the talking. You don't need me. You don't need me to be bullish. This is kind of what I live for here. All right, next. The low time frame speculation. All right, here we go. 4-hour chart. I still think this bottom is in. I still do not think the lows are going to get run, because the count is still valid as it stands. Right, where we've got a. Well, let me put it this way: if the traditional financial markets take another leg down, so if what we saw last week was just kind of a B wave corrective impulse, prior to a C leg down, or excuse me, a B wave corrective, and then we've got one more C impulsive leg down, then there's always a possibility that we've got one more low to go. Okay, so I will say that because I don't want I do want to be aware of all the scenarios, but I don't think that's going to happen, number one. I'm going to get to that in a few other posts on, I'll probably do a weekend market update with just traditional financials on the YouTubes. So we'll save that for that video. But looking at this structure right now, this A, B, C flat correction looks exactly how you want it to look. This 5 marking the bottom here of the C, this impulsive C, it surely was impulsive. That was a pretty violent move down. And now here we are, we've got a 1. I think we're forming 2 here. And then my base case is 3 is coming. And so I do see a lot of questions regarding the structure that we're in right now, not looking impulsive. Well, let me share something with you folks. Bitcoin and the market's job is to deceive the most amount of participants, okay? Let me share something with you here. So this oval that I've got here was price action prior to this impulse, okay? Let's zoom in on it. I posted a line chart, kind of went through this last night. Does this look, if you're looking at this price action and you don't know what's coming next, okay? Does that look majorly impulsive? Does this action here just kind of bleeding, just kind of going sideways? Does that look like it's impulsive? Okay, let's keep going. Let's go back to September, October. This was a really good one. This really had people wondering what the heck's going on. I'm covering that side. Does this look like it's about to lead to a major rally, this price action? Dribble, 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 bump, fake pump, dribble, dribble, bottom's falling out, little leading diagonal, 1, 2, 1. Oh no, nothing, no impulse, it's gone, it's gone, it's gone, it's gone. That's what that is. This is what and anyone looking at this structure before, I didn't see 95% of folks on X, I did not see projecting an impulse after this. Okay, those are just facts. And what happened? See that? What happened after? See what happened? Oh, look at that. Look at that. Oh, there it goes. There it goes. There it goes. Okay. So there you go, folks. The market's job is to deceive. And just because it doesn't seem impulsive to you is because you and I are all used to these movements. Those are, your threes. Your ones and your twos, not always, right? People are saying, I want to see this now, and I want to see it too, guys. I want to see that movement. Well, we're not in that stage. We're not in that stage yet. So very, very, very common. And should this come to fruition, my base expectation is a movement up towards 100 range. Could see a check back, to the 80s, and then we're going, in my opinion, terminating this third, this minor three around 140 to 160 area, and I can see that happening as soon as June, So, and maybe sooner, folks, maybe sooner. I know people get freaked out with the time-based predictions, and so often I am wrong with those, and many are wrong. The overall direction is what I care about. Most of the holdings are spot, so patience is what's needed. That being said, where we are in the structure, I think most people are going to be caught off guard with the speed and the aggressiveness of the rally that's coming next. All right, next. Oh, did it again. You all that know me know my computers, and it's the issues with my computer when this happens, folks. But you know what? We're just gonna roll with the punches. I'm gonna go to Mara. I'm just gonna go to Mara first, okay? And then I'm gonna go to Mara BTC, and I'm gonna go to. Let's go to our candles. Let's go to our weekly. And another reason I think, it just to me, this is the most asymmetric portion of the entire rally in miners. Bitcoin, it's all the same. Why is it the most asymmetric portion of the rally? Now, remember what I just said about 1-2s, right? 1-2s, impulsive 1-2s, don't always look bullish. In fact, with Bitcoin, the last three major impulses, they didn't look very impulsive at all. Now, let's translate that into where we are with the miners. And I think we're in for some surprises here, whereas the market is not prepared for what's coming, okay? So with the miners, where are we? Well, with the miners, I have us coming out of 1, 2, minor 1, 2. So we haven't even started. Well, we started 2 weeks ago. It is my claim. We've started 3, okay? We've started 3. And if we go back to my favorite candle of all time in this run, it's the Mara weekly candle of October, the week of October 9th, 2023. And I talked about this candle. What is that candle, folks? What is that weekly candle? What is that beauty? That's an inverted hammer, right? That's an inverted hammer after this downtrend that started in July, inverted hammer, reversal, and led to just an incredible move in less than 2 months. Okay, what do we have going on? Not this week, but the last week. We got a hammer, and it's all about where these candles occur, right? In downtrends. This inverted hammer at the top of a trend, that's bearish. This hammer candle at the top of a trend, that's bearish. But these at the bottom of a trend are about first, second, depending on how, the resource you look at, most bullish type of candle formations on weekly time frames. And so we got these reversal candles at key inflection points. And now let me throw up, remember our stage analysis? Let me throw up the 30-week, which is in blue. Back in August, we hit the 30-week. We breached the 30-week. the week of Monday, August 21st. The following week, we had a B rally. Okay, we had a B rally, a corrective rally, and then still managed to close above it the following week. But then 1, 2, 3, 4, 5 weeks of price action. So what was the tell here? I suppose this is not an easy one. I didn't see this. Like this is so much of this stuff is in hindsight. You look like a genius, right, folks? Like this was not obvious when it was playing out. I was just DCAing into the miners this whole structure. Okay. I got long options when I thought it couldn't go any further, and it did for 2 weeks. I got long options here. Okay. The longest I've ever been in terms of option margin position. And I don't do that very often, right? Options you got to be careful with. You got to be ready to lose it all, up to max 5% of my portfolio. And I'm not using them very often. I went long options here, long options here. I did go long options here. That didn't work out. But then I went long options, micro strategy in that same area that did work out. So the micro strategy really worked out. I did Riot and I did some Mara there that didn't work out. But in terms of maximum positioning at key inflection points where it just, it seems like this is going to drag on forever. Anyway, I digress, but I always get asked about options. And so that's that. So we've got, so what do we have happen last week? What we had a really bearish looking candle, decisive breach below the 30. And then you've got this on an island by itself, no support, right? Like, I mean, you essentially have like lows, the entire low structure kind of run there, right? Maybe not. But you get the point, like just teetering up against December lows. And then you just had a violent reversal during the week. You had a violent reversal during the week, and then this past week, boom, well above it. You got a reclaim. And in essence, where we got a reclaim here was a very key. This green rectangle isn't here, for no reason. It's here for a reason. It denoted the difference between being in bull market territory and bear market territory. Okay. Right. This thing got rejected, and oh man, was that violent, right? From 19 down to 3. And we came all the way back up and we got rejected. Ooh, that was violent. Again, 19 back to 7. And then we got out of it. And then we came back below it. And then we got kind of out of it. And then we came back below it. And then where we needed to, where you want to see a reversal at that 30 week, we got a reclaim. And so my claim here is this is a sign of strength. This is a sign of strength. This is our accumulation base. And expansion hasn't even started. Expansion hasn't even started. So much like where we were with Bitcoin back in September and October, that's where we are with the miners. And I think people are going to be shocked as to the move that's in front of us, potentially in front of us, as I see it. And so that's Mara. The other tell here is Mara BTC. Mara BTC is giving us a lot of information. Mara BTC is just an absolutely bullish structure. There's no way that I can interpret it any differently. And I've got the 30-day moving average. Let me zoom in on a couple things here, folks. Let me zoom in on a couple things. This is Mara denominated in Bitcoin. And let me get this out of the way because this area is important. Let's talk about some structures. So going back from July, so we're talking the depths of despair move in miners. July, we had 1, 2, and then we just had this brutal 3, 4, 5 correction against BTC, against Mara denominated in Bitcoin. And then what happened? Then you had a reversal, and this is this green rectangle of support that goes back years. we had a reversal and kind of broke the downtrend. This is a downtrend. And it started moving. And at the angle at which it came in was very close to the angle which it came out. That's what you call a V-shaped recovery, okay? And so a lot of that stuff is reversion to mean. Hooke's law in physics, right, is spring energy. Inelastic objects that have pressure exerted in one direction are going to have equal to or greater to the amount of force exerted in the opposite direction. We see that show up so much in financials as well. And that's what you're looking at here. And so what do we have going on here? We had, right, a 1, 2, 3, 4, 5. Brutal. Breach this, reclaim. And remember, look at this daily candle on that reclaim. Let me zoom in. Just absolutely bullish, folks. There's no way to get around this. Look at that candle on the reclaim of this range. See, there aren't too many coincidences in technical analysis. Market makers Monday, this is Monday. Remember when the miners started pumping and they just sent Mara down like 3-4% while everything else was moving? And then boom, V-shaped explosion the next day. And we got a reclaim of this 30-day, which isn't as conclusive as a 30-week, but much like we saw back here. And so in a scenario where we get, again, a V-shaped recovery, the miners to me look like the play in terms of appreciation percentage-wise over any of the other Bitcoin proxies or Bitcoin. Now, I don't hold, that's not me to say, you know, I'm holding all miners now. No, the order of operations for me has always been Bitcoin, the largest holding MicroStrategy 2, although I've divested some of the MicroStrategy into miners. But it's been Bitcoin, MicroStrategy, miners in that order because the miners are the most risky. However, when you reach points like this in confluence and structures, I showed you the last chart in Mara's, I'm showing you this chart here. This is what we live for. This is why, if this plays out, the miners, I believe, are going to severely outperform. Okay. Next, Riot. Koosh, why haven't you been showing Riot any love? Because Riot hasn't been showing me any love. Okay. Until now, Riot is back. Riot is back. From a technical standpoint, this structure just it was anemic, looked broken. And all it really was doing was forming a 2, which basically just means its correction wasn't over. Okay, its correction wasn't over. So it was still correcting as other stocks, Bitcoin derivatives were in a different phase of the market. And what I wanted to see happen with this was, you know, there's always a point in time where it just looks ugly, looks awful, and then there's a reversal. The market quickly reprices an asset and potentially marks an inflection point. And what does that for me is volume, okay? Volume. And so this is what we wanted to see. Highest daily volume or weekly volume since its blow off top. Okay, so we saw that, and we also saw it was the biggest gainer out of all the miners last week, right? And so very similarly, we had this hammer candle at a key support structure. The bottom actually fell out on Riot from a structural perspective compared to what I just showed you with Mara. But look at that hammer candle. Look at the follow through right up to the 30-week, folks. Tell me this 30-week doesn't mean anything. Well, look at that. Boom. Right to the 30-week and didn't quite get over it. So that's what we're watching for next week. But for all intents and purposes, my thought here on Riot is our repricing is underway. I know I get a lot of questions in terms of targets for Riot, and I don't know, right? These high-end targets are should they come to fruition, are very difficult to project. But I like to just I like to look at the structures that it's currently in, the symmetry in these structures to tell me what the breakout targets are. Much like we could use a structure that it was in before and that symmetry to tell us potentially what are some breakout targets, and what's that symmetry? Well, you've got an area of resistance here. You've got, an area there and an area there, right? Equal lengths in terms of symmetry and the target. And that's what I use to eliminate my position in 2021 at $40. And I went to freaking 80 the next week. I mean, these are really difficult things to time and try to sell tops. It just, people think it's easy. It's not. Next, what does that same structure here look like? Something like that, right? That's symmetry. If I'm looking at the distance between the mean and the bottom, and kind of this mean, this neckline and the top, anything above 77, 80 to 130 is probable based on the structure. Is it going to happen? Again, we're gonna find out. And I never wait for this. I never wait for this, because that's never guaranteed. I'm talking about wave fives. My goal is to capture that move. Okay. That's it, folks. That's the weekend update for Bitcoin and the miners. Hope you have a great rest of the weekend, and yeah, get ready for some fun.